It struck us going into this period that equity was really poised for a correction. When the Fed keeps rates extremely low and when you pump liquidity and you have the type of stimulus that we had, you get late market cycle, truly frothy behavior. And we saw that in so many ways in the market. I mean, just in a very simple way, whenever you see an explosion of the number of SPACs that are printed, that's usually an expression of ebullience in the market, and it's a signal to be cautionary. When you see rates go as low as they are and every credit spread to drop to the levels that they were at, it's a cautionary expression. And that forces, and by the way, this is exactly what policy was designed to force, was longer term, equity-oriented, more speculative investment. And that's what was achieved. But it does mean that valuations get off kilter. So it wasn't surprising to see a downdraft. Today's downdraft struck me as a little bit of an excessive reaction to the fear that the Fed would completely raise rates, sell assets, and cause the entire market to tank. But it did impose a certain amount of maybe more rational thinking on valuations and equities.
I think it's going to be the sectors that really got hit the hardest. And I think that's what you saw today in the action, especially in the rebound. You saw the Russell 2000 was what turned positive first today, and it had been hit the hardest, right? It was down 20%, basically in bear market territory, and we saw that bounce. Crypto assets, they were down. They hit hard. Bitcoin down 50% and, in the green today. So the risk assets have been hit hard. They're starting to come back. Maybe tech is next. Nasdaq, like you guys said, looking to maybe make some upside move here today. We don't know. It seems like we don't know where we'll land today, but it seems like the buyers are coming in to buy the dip here.
We have a third of the S&P reporting. IBM's just about to come out. We have a lot of the mega caps. We're expecting large-scale beats. We're expecting a 12% year-over-year earnings growth. I think that is finally going to start to be the story now that we have this behind us. But volatility is here to stay. Make it your friend. Buy in, establish long-term positions, get defensive with healthcare, and stay in the game. This is normal.